Good evening, ladies and gentlemen. We need to talk because the fact is so many stocks right now are just utterly skyrocketing. And the fact of reality is that is not going to last forever. And so many of you individual stock pickers got absolutely slaughtered through like 2020 into 2021. I feel like a lot of people probably didn't learn their lesson. I've just been seeing a lot of comments. We're going to talk about the most hyped stocks in the market: Nvidia, Tesla, Palantir, but we're going to roll back. And I want to kind of give you this broad view that really is kind of unsettling at best. I mean, it's just a fun perspective to have when you get so caught in the microcosm of media and markets just shoveling stuff down your throat, especially people like me. I mean, I'm caught on the internet as much as Meet Kevin. A lot of these people are stopped, they're not showing their net worth like they used to. So there's always this kind of like, I have to keep up with the Joneses and you got to outperform and you got to do this, that, and the other. And I think it's, for the most part, it's detrimental to people like me, the scum of the earth, the clowns of the internet that want to make money on the internet. Do this to you every day. This isn't a career that needs to be done every day of your life, folks. But here we are because we love talking about it. So hopefully you have skin like a rhino. You can fight through the mental insanity and actually come through on the other side. And I know most of you are probably losing money statistically against the markets. It's how it's always been and always will be. Stock picking is a terrible track record and it's getting worse. But this article came out in like September 18th of 2020. And this was just in the peak of this insanity of crypto running and everyone's making a fortune. And they're like, you're an idiot. Like, stock is the best time to be an individual investor. We all saw how that turned out, right? And same with this article here. This is a newer one from 2022, which is just great. And the end of 2022, stock picking isn't dead, but for most investors, it might as well be, right when the markets started to take those wicked, massive corrections. And I love these articles. I find them utterly fascinating because it always winds you back into the statistical averages and where you sit within those statistics. And if you use that math to literally guide your strategy into what you're doing with your retirement and your money, it's crazy, how powerful some of this stuff can be. Because I want to just show you the history of what I find most interesting about the top 20 stocks going back to 1990. And I like paying attention to each decade. And I like asking the question, right? Are these top few companies that everyone was so hyped about in 1990 as popular as, did they give the same kind of return over the long run as the S&P 5? If I just bought the S&P back then, or if I bought, these top three companies, where would I be in comparison, right? And then I also want to ask myself, what about the most hyped stocks? What was everyone talking about that led to like the most absurd gains in each decade of a year? And do they have any relevancy today? It's such a fascinating thing to just run through. So during, the 1990s, you had ExxonMobil, you had IBM, and you had Lowe's. It's kind of interesting because the 90s was before that real big jump. I mean, IBM, of course, the conglomerate. I mean, it's not like it's a small tech company by any means. But if you go back to 2000 during that dot-com bubble, even if you bought the dippity of the dip of 1990 there, just before 2000, the bust, you'd be up 104%. Even if you bought the bottom, and again, this is over 20 years ago, folks, 2002, the bottom, you'd be up 205%. If you go back to 2000, you look at the S&P 500, I think the rate of return is almost 300% with the dividends and stuff like that. Now, obviously, IBM pays a dividend, but I mean, comparably, it doesn't feel nearly as close unless you were very accurately buying the bottom there, right? Where is my, we'll take a look, because incomparable to, say, the S&P 500 here, right? We go back to the peak of the 2000, right? You're up 265%, excluding the dividends and the dividend increases. That's one stock. You got ExxonMobil here, right? Going all the way back. Actually looks like it's held up pretty well because it didn't have the volatility of the tech until recently, right? So you're up about 154%. The dividend with Exxon is the only thing that's been really thriving for you over the last 20 years. I mean, the rate of return has been absolutely horrendous, especially if you bought it there after any decade. So like 2010, you maybe caught the bottom of the market, you're up 89%. You go to 2020. I mean, I guess 2020 was probably the best, most opportune time to ever buy it. I mean, that's where the real rate of return grew in, if you could have captured that opportunity of a lifetime. But again, I want to kind of keep that perspective on the decade here. So you look at Lowe's, right, which is more comparable, I guess, in line with Home Depot. And year to date, I mean, this thing, it's been doing pretty good. The 5-year, it's not so bad. The longer we zoom out, though, and you go back to the 2000s, and this thing is nowhere near its high. So this was the 90s. So if you were really hyped into these three companies, you just bought them blindly, never looked back, and that was your retirement. I'm sure it's fine, but it's definitely missing out on a huge amount of potential that it could have had. So let's look at another decade. Let's move into the technological dot-com era, right, where you had Microsoft, General Electric, and Cisco Systems. Obviously, I think all these companies are still pretty pronounced for the most part, but we'll take a look here. Let me get these ones out of the way. So you got Microsoft, which is obviously the king of the pile here, but it's always fun to recognize that Microsoft in its early 2000 era didn't really offer a rate of return until about, because it wasn't too much of a dividend play, but I mean, it didn't do anything until about 2016. So you got to wait 16 years of holding Microsoft before anything actually happened, right? Sorry, what was the next one in line there? We had General Electric. General Electric, again, another horrible play of the last 20 years. Another really hyped stock. Everyone's like, this one will be around forever. It makes parts. Electronics are going to be around forever. How could this company fail? Where's it going to go, right? And then finally, I guess the little gem here is Cisco Systems. Let me look this one up because I don't have it pulled up just yet. I'll pull it up here. Cisco, baby. Cisco's doing pretty good recently, though, isn't it? Let's take a look here real quick. You guys see that? Yeah, what's Cisco been doing these days? 5-year, absolutely no return. If you bought at the peak of the dot-com bubble, you still haven't made money. But if you cost averaged over the years, you probably did all right. But actually not that great. Even from 2004 to 2024, 20 years later, it's only up 145%. So still trailing the markets, folks. Excluding dividends, of course. Dividends might keep it a little bit more even. So let's do one more decade here because we all know what kind of happened during 2020. But even in 2010, which feels like it was yesterday almost, but God, we're all getting old, aren't we, folks? 14 damn years ago. Remember what the top 10 stocks were 14 years ago? ExxonMobil, Microsoft, Walmart, Alphabet, Apple. Apple wasn't even the largest company. Exxon was. You got Johnson & Johnson. I mean, a lot of these have been great companies from 2010, but I mean, for the most part, I can't. Microsoft's an easy one. Exxon hasn't done really all that much from 2010. Walmart, however, I think Walmart's done fairly well, hasn't it? I mean, Walmart's given some pretty good returns if you were lucky enough to pick that. Yeah, look at Walmart. Walmart's a gem here. Look at this. From 2010, whew, baby, you made some money here. It's up 306%. But again, you kind of go back to the dot-com bubble and you've had nothing for, it's similar to Microsoft for about almost, a good 16 years there. Didn't really do a whole lot, but the last decade's been super generous for this guy. Any other interesting ones? We all know Apple. Johnson & Johnson's been one that's favorably talked about these days because it's trading at a relative discount. Nothing crazy, probably more closer to fair value. But even from 2010, see it comparable to the S&P here. This thing's up 135%. So even J&J, the power beast, right? But if you look at the S&P 500 again from 2010 here, and this is the VOO. Let's use SPY because SPY has a little bit longer of a history. Terrible fast typing. If we go back to 2010 here, let's see, just after the little pop, you'd be up to 400. Is that right? If you bought I guess that'd be more toward the bottom of the market. Is it really up that much since 2010? 402 friggin' percent. Is that real? That's crazy. Think about that. How crazy that is. Just since 2010. Oh my God, an indice like this. So I want to talk a little bit about the hype stocks now. Let's talk about like if you were back then and you had your article and your friends hanging around and maybe the Wolf of Wall Street was whispering in your ear. Let's see those kind of stocks. So if we go back to 1990, one of the best performing stocks, surprisingly, was up 251%, was Waste Management. You had AEG and a whole ton of other companies. Amgen was in there, which was interesting, offering some pretty good returns. But a whole lot of companies you probably haven't heard of. And what's interesting about Waste Management is it's actually a really good company. It's very foundational, has been for a long time. The incredible thing is from 1992 all the way to like 2013. Heck, I'm even going to say like to 2015. You weren't really making money in this stock. I mean, whoo, man, over a good 25, 26 years to make a return. But if you bought it in 1990, you pumped, man. You almost 1,000x your money. It is crazy that Waste Management had this little blimp of history and then it started to take off again after 2013, 2015 timeframe. Crazy. So let's take a look at, let's move on to the earlier 2000s here where things got real crazy. Because I guess in 2000, you had the dot-com bubble going on. So this is where we start seeing like 725% returns. Again, it gets crazier than this, but let's just say here, we got AY. What's this company? It's called Aero, okay, which was up 742% that year. AYRO is down about 100% since the good old era where it probably IPO'd in the dot-com bubble, right? Not the best thing. That one's definitely obliterated in half. What about this? Look at this. This is 2010. There was a stock in 2010 that went up 1,289%. Now, that has got to be some form of a fluke. But then again, if you look at the next few stocks trailing it, you have Hive, which was up 147,000%. Then you had NTRP up 19,000%. It's like the whole world of stock performance and pump and dumping just shifted in 2010, right? Just bonkers like returns. But you look at these stocks now, like Risk On International, right? I had that wicked gain in 2010. God knows from what. These mood swings are crazy. I mean, they're just, I don't know why. Who knows? But this thing was moving like crazy, and now it's down 100%. Hive, the next best performer with its friggin' thousands of percent return. Similar thing, I guess you can see. You go back here, and this thing had some pretty crazy volatility where it could pop 14,000%, even up to 2017, which makes no sense. So why am I showing you all this? This is like the insanity of how 99, probably, I can't be, it's got to be way higher than 95%. I refuse to believe that over a 10, 20-year period that 95% of people are able to like outperform the S&P with a 400% gain and just since the bottom of the 2008 crisis, which is just unfathomable to think about in all reality, like just from an index. So now why does that work so statistically well over everything else? You know, actively managed funds, you got to do the impossible. That's what we're all trying to do. That's why we love picking stocks, that itch, that gamble, something that you get involved with, you get passionate, you can get behind the company. It's a beautiful thing. You work at these companies to get, to get comp and paid in stock. I get it. It's not like that is necessarily a bad thing. It's just that over very long periods of time, especially if you're looking at that long-term horizon and you think you're going to sit here and listen to these hype stocks on YouTube and just keep buying into them, that things are going to work out well, especially if you're one of those people that is timid when it comes to taking profit, right? This is like one of the biggest itches on my back because, again, I got reamed out when I sold my tech companies coming into this kind of volatile period of 2022. The wife held on. She's a gem. She's got more cojones than I do. But keep in mind, we were very concentrated, and me diversifying a bit definitely helped. Even though if I would have held, things would have been probably just fine. Motorcycle going by, super annoying. But the fact is that like you didn't know how bad things were going to get, and I took profit on so many companies that made me tens of thousands of dollars that are down so dramatically. My best performing stocks, MindMed, like 1000x, Bagger, boom, 10x it, baby. You had Canopy Growth Corp, and these stocks have been absolutely obliterated since those peaks. And I could have sat there and said, hey, like let it ride. Like this is gonna, it's a great company. It's gonna go somewhere. And it just didn't. And you would have been down detrimentally. I mean, these stocks returned to sub where I was initially buying them, especially Canopy. I think I bought that. I think these are such great examples of like when you're looking at stocks, like to get emotionally attached is like one of the biggest mistakes. And it's so easy when you see the passion and the fire behind some of these stocks like Tesla, right? So, I mean, let's just take a look at Canopy here because this is always super interesting. Can I share that? Can you see that? Canopy Growth Corp, man, it just blows my mind that this was the first stock I ever bought when I started investing almost 10 damn years ago. It's crazy. I think this was back in 2014 timeframe. Look at this. Canopy is down 65% from where I initially started buying it before this just, absolutely meteoric run that hit like a 2000%. Now, God knows I didn't make that kind of money because I didn't know what the tops were, the bottoms were. I held it up to this first bump, sold a bunch, and then I think I held it up to, this is like what, pre-split pricing here. I think I held it up to this. I sold a lot here. I sold the rest of it here. My mom got lucky and she wrote it literally to the top and pretty much sold the tops. But you look at how long this run lasted too, right? I mean, this historic run lasted from 2016 to 2019. So think about that, 16, 17, 18, over 3 years. You were sitting here just having people bash your face into the floor about, oh, you're missing out on the MJ run, the green run. How could you be missing out on this? Like, what is wrong with you? Like, you should be buying this. And you got sucked into it. And if you didn't take profit, you got absolutely obliterated. And same from 2016, right? I mean, you look at the S&P 500, it's up 171%. You didn't get the 2000% gain, but the only way to actualize any of that is to take the profit and try and be early. And again, there's nothing wrong with trying to speculate on stocks like that. So why am I bringing this up in tandem to the most hyped stocks we hear about today? Because NVIDIA, I think, is going to be a prime example of this. It's one of these stocks where people think these historic runs are going to persist, that the company, what it's doing today, is going to be fundamentally long lasting, at least for years to come. And again, that is something that is not proven out. You can't say it is reality. That's what I try and get people to understand, which is why, like, I would have loved to bought Nvidia so many times, and I just can't do it because I can't wrap my head around it cognitively, valuatively. I don't understand how large language models work, how it even came about, why all these tech companies are pouring tens of billions into it, and God knows it has nothing to do with anything otherwise. Crypto, gaming, you fucking name it, no one cares. The only thing making Nvidia this rich is other tech companies, me and you buying an iPhone, and then Apple putting that money into Nvidia. That is just the way it's going right now. And it's not going to last. Just like I said, I don't know how long it lasts, but I'm telling you, it is not going to last. So what does this mean for like other companies in tandem when it comes to Tesla, company that I am buying? And I told you guys this a few times. If this thing runs too much going into this event in August, I will sell some of my shares. How many? I don't know. Maybe I sell the whole thing. I have no idea. I just don't like front loading because that's what happened before. And which is why I took my money out of Tesla, because back here, this run, super unsustainable. Like anyone can recognize that this, when the value wasn't baking into the company, was deserved. There was no self-driving that was promised. There's no robotics. Robot wasn't even announced yet. And it was just too much. Think about it now. We have this robot. We have all this new stuff going on, and the stocks did nothing but go down. So like I can start recognizing that they have time for these businesses to mature and add an extreme amount of value that I think was trading at a discount when it was closer to $500 million market cap. And a lot of people are like, no, it's not, like it's losing money on cars. It's like, yeah, but no one cares about what's happening today. It's what's coming in the next years, right? Because again, cars are getting highly suppressed by interest rates. People understand what's going on with a lot of the auto companies and EVs and all this stuff. Now they have a new master plan. They're going to release a mass market vehicle. It's likely going to be for robotaxis. People are getting excited again. That product doesn't exist yet. Robots don't exist yet. So this thing starts running up to $1 trillion+ valuation on what, the 12 billion in net income it currently has. And again, this is the reality that pumps this shit right here. This is how growth stocks work, right? I mean, you take a look, forget total revenue. 100 billion is great. The revenue growth from 31 billion to 96 billion. This is a prime example of, you know, an insane company that, you know, they have some proven business of growth. But the problem is, going to cash flow. Look at the free cash flow. It's just absolutely garbage right now. Like you're paying this. This is what hits the bottom line. This is net, you know, shareholder return is like 4.3 billion in 2023. You know, the year prior was 7.5. I mean, you're paying $700-800 billion for a company that's generating 4.3 and has really only doubled that free cash flow, right? But again, I mean, what I like to look at too is if you can look at, let's show me if you take a look at like gross profit, which I think is more commendable because, you know, gross profit is the cost of everything, bringing it into the bottom line before you have your other expenditures with office and all the bullshit expenses that are more controllable. 16 billion, right? I mean, you look at these values and it's great that it went from in 2020, 6.3 billion to 17 billion in 2023. Like that's the hype. Like Tesla's proven they can do some crazy shit. Right now, they ain't doing any crazy shit. Things are just kind of slow roll with the Cybertruck, all this stuff. But people can get so hyped. They can get so incredibly hyped about shit that doesn't exist today. And I like playing these kind of stocks for these momentum moves. The problem is I don't know how long, like when these things happen. Like I was buying Tesla presuming this shit wouldn't happen at least till 2025. Figured after we get through the bad earnings, which earnings could wreck it, by the way. I mean, earnings could absolutely crush it. The market's psychotic, though, and they might think that event coming up in August will rebound. Who the hell knows? No one knows what's going on, right? So these gains for me aren't Sorry about that, folks. I'm back. I kicked myself out of my own live stream. Like, give me the comment if I'm back. I accidentally backspaced it, going on this epic rant. Let's recoup that a little bit. Let me know if I'm back, though. Give me a thumbs up here, folks. I'm a little speculative on what I just did to myself. Scared the crap out of me. Like on this screen, and I backed it, and it just took me right off my StreamYard. But getting back to that point, bro really is a magician. I know, right? So I just want to kind of bring it back to this point. I got to screen share this again because I lost it. Oh, come on, man. What is wrong? Falling apart here, guys. It's friggin' Sunday night. Got to get pumped for the market tomorrow. No one can wait. And here we are just screwing the whole stream up. So you have to imagine that hype is going to bake in so much. And if people just overdrive that, which again, to some extent, I think NVIDIA is able to get some valuation out of it. And that's what people are playing at a 70 times multiple. But Tesla, oh God, if it runs into the 300s, you get mid 300s is nuts. That's just insane. I'd take profit. If we get in 300s, I'm taking profit. I'm not going to be riding this that way. It just seems a little bit bonkers to me. And like even now it's bonkers at 250. But like I said, I think fair value is at around $100 a share. I don't think we get bound to 100. We hit 150, 140, we bought some shares there, right? So we'll see what happens. I could see it coming back down to the 200s or the high 100s. Maybe we'll see what happens, but this isn't meteoric enough for me to want to sell, but it is a reality that's probably going to come. Yeah, recuperate. That's the new word. Recuperate my losses. That's what I'm going to go tell the accountant. I need a tax loss harvest. Recuperate some of my losses. Recuperate it. Anyways, folks, so let's talk about some comments and just kind of get into it, because like I feel like it's weird how the dynamic has changed so much since I started this channel when it comes to my portfolio specifically, because I was so into individual stocks for such a long period of time, even before I had this YouTube channel. Then my fiance, she gets into it and her individual stocks and her index funds and all that stuff. And I got to take all of this into consideration, and the cash and the mortgage now. And it's like we've evolved into being a human. It's like, welcome to first world living, baby. So it's just funny now how like I've kind of reduced the portfolio down to just a handful of positions because I can't handle the anxiety of volatility with 20 or 30 individual stocks. Nobody can. And I've come to recognize that, trying to pick 2 or 3 individual stocks leads to by far the best performance. And I'm shocked at how well that still maintains to outperform a market, right? Like if you can just pick 1 or 2 companies that you really believe in that have some real potential in 3 to 5 years, you're not buying it at a peak of some absurd value. You're playing a little bit of Fugazi with a little bit of reality and value investing, and you kind of, mad doctor scientist that shit together in your little mental lab, your chemistry brain lab, and you're like, okay, I can see some value here. Everyone's shitting on it. The media is getting against them, but their fundamental business is strong, huge growth potential. Let's do it. And you just buy a reasonable, not insane position in it while you cost average into ETFs. You can find yourself easily outperforming a lot of the markets, right? And in markets like this, it's hard to fail. It is hard to fail in these markets if you are willing to take profit and you're willing to just be very, on the ball, and you're not too crazy. You're not too. You can buy some lottery tickets too. That thumbnail is 10 out of 10. Keep it up, my clickbait thumbnail. So we got some comments around the portfolio, which is always interesting too, right? Like, why not just roll SCHD into VOO? Pick 1 to 2 tech companies if you want that. You think you will outgain the overall market. Just my 2 cents, Kyle. I've gone completely away from the dividends last year. My portfolio has absolutely exploded in this last year now. So this is a fundamental, personalized, personal finance kind of comment, because like for me, I like SCHD. I've told you guys this many times before. I get that it's underperformed. You'd be way better in tech stocks, but I'm not looking at retiring in the next like 20 years. Like I'm looking at about a compressed 5 to 10 years, and we're rapidly, getting great growth out of the portfolio right now. But I always recognize that I want dividend income, because I've been through a few cycles in the market where when those markets keep going down and growth stocks are just destroying your account, that income to just constantly be re-interjecting and cost averaging exponentially really offers some great rates of return, especially when you can take advantage, right? Because the 1.2% on whatever the S&P is paying now is just garbage. I don't even look at it. I look at the S&P as a growth stock. I hardly care about the dividend, which is why I kind of just get about right now. I think, what am I? I'm not even 30% dividends ETFs. I've got VDY and I got SCHD making up literally just under 30%. So the rest of my portfolio, for the vast majority of it, is growth, right? And when Tesla just shoots up like it did, and I'm up 40 or 50% or whatever, and that now that gain on that position is larger than, some of my recent buys on the VOO, like you can start easily kind of catching up some of the lost gains that I would have not seen in SCHD. I get a lot of people want to concentrate, but my comfort level just doesn't take me there. It's personal finance, right? Some people are, if you're at your retirement age, if I was in my 50s and I said, hey, like I'm going to get ready for retirement in 10 years and I need income, I would slowly start orienting some, more income oriented stocks and make it a bigger part of the portfolio. But again, I always believe growth should be some aspect of it. I've also seen comments like, you're constantly gaining like 20K a month, bro. Makes no sense and very depressing. I think I did the math, and since 7 months ago when I bought this property, I think my portfolio has been growing by about 15,000 a month. Not total, like that's me contributing. That's the absurd gains, because the market over the last several months has done nothing but go vertical line. I mean, the S&P's up what? I think this year it's stupid. It's dumb. It's insane. I mean, it's up 17.35%. I've got 150K sitting in the S&P 500. That's, 17.5% return is like, like a 25. It's a stupid gain. And then you got Google that, crushed me a few $1,000. And, SCHD has been returning quite a decent amount of money with dividends, and I'm up from where I cost averaged in it. And now Tesla's kind of going up. And I think my recorded that I showed you guys there is like 18% of my portfolio. I got about a 43,000 $700 gain on the current holdings as they sit today, not the ones that I've sold or anything in between. It's stupid. The markets have just been utterly greedy. It's great. I mean, it's fun, but it's funner when it's down because that's when everyone gets miserable, and that's when I go most aggressive. To be blunt, I'm giving up on investing in stocks. Oh, I don't want to scale over that by him saying, because he says it makes him depressed. Sorry. The reason I was bringing that up is that I hope it doesn't make you depressed. I've been doing this for 10 years. I have a great job right now. My fiance has a full-time career. Everyone's kind of playing their own game. So it's just savings rate, frugality. I don't know what to say. I hate when people get depressed because I'm not trying to brag, which is like that beginning of this video of you see so much in the market right now with people showing you such absurd gains. But the fact is I don't think most people actually are seeing that, or they're still recovering from 2020. But to be blunt, I'm giving up on investing in stocks. I put $2,000 to $3,000 a month, and it's not but down, down, down. So frustrating. And I only invest in boring big companies. But as we showed you guys, it isn't the few companies. You can't. This is the other problem, right? I showed you these solid companies, ExxonMobil, these huge giants, and you think these are great, boring companies that should offer a rate of return. Hell, even Buffett's buying oil. But the fact is the S&P upper weights the best performing companies because it's only ever a handful of stocks that outperform the rest of them. If you went through the entirety of the S&P 500 from 2020 all the way till now, and you just looked at the lower half of the market and see how many stocks have come in and out over those decades, you would be blown away by the only handful of companies over each decade that carried the market to where it was, especially in the recent decades, right? So you can't just focus your whole portfolio and presume what those biggest companies are going to present themselves to be, because people are going to say it's Palantir. They're going to say it's going to continue to be NVIDIA. Why aren't you buying an NVIDIA right now? This could be the dumbest possible time to buy it for all we know, right? We missed the boat. And if you were in it early enough, you probably already took your profit, because why wouldn't you? You'd be insane to be holding NVIDIA right now if you bought it at the lows. You'd just be insane. You might as well go be the GME guy. Just go triple leverage up and pray to God it works, because most people that bought GME did not get the pump. They got the dump, which is that's why I love the memes of Roaring Kitty as entertainment value. But when you recognize it for what it is, it's complete and utter insanity. You start to notice that maybe it's not the best idea to steer in the direction of trying to pick companies, because it's a sketchy thing to try and do, man. I like VFE up 30%. Yeah, I mean the dollar conversion on that's nuts too. I mean, yeah, it's crazy that an index that was created friggin' decades ago, that is purely non-math, non-emotional, just purely math on market cap weighted investments, and they'll auto swap in and out based on their market cap performance. That system, I just don't think people put it on a pedestal enough, because it's boring. Imagine me, Kevin comes on and says, all you have to do is buy the S&P 500. Why the fuck would he do that? You're buying his course. You're buying into day trading and options trading, even though statistically, I'm just saying, it doesn't take a genius to look at math and realize hey guys, someone already did the hard work for you. Why are you trying to reinvent the wheel, right? Vic, which you showed us, got me wrecked. VIK. How is VIK? My speculative plays here. I haven't looked at VIK in a little bit because trying to get managed and not Viking holdings. I think Aduro had a good run. Some of these more speculative, some of these companies that sponsored me. Got to be careful with these small caps, man. Got to be careful. I think it's what's the stock called again? I think it's VIK on the, because this one has some great potential still. It's a Villa Energy Corp. Yeah, I mean it's hasn't done much but go down 70% so far. I've been looking at a few other ones as well. VIC's got some work to do because they still had such a good lineup when it comes to their oil, natural gas. Charbone Hydrogen's an interesting one, that a company that I work with right now. Obviously, these are highly volatile penny stocks. This thing turned around, sold off all its old assets to focus on its partnership with Superior. When it comes to these stocks, and you could throw these in line with crypto, you could throw these in line with any kind of small cap. These get in, this kind of reminds me of Shark Tank when Kevin O'Leary is going on about how 9 out of 10 of the things they invest in fail. That's penny stocks. This is the equivalent of going to a casino. It's worse than buying Tesla. Hell, it's probably worse than buying NVIDIA right now. But if you understand these little businesses and you think they can get to cash flow, or you think they have something actually potential behind them, and businesses, this is where it's good sometimes. This is where I made my money on MyMed, Canopy, but I lost a lot of money too. Hell, if those of you that invested in Momentous, I mean, any of you guys check out, did you guys get the lawsuit for Momentous? I mean, my fiance is like, I don't even care if it's $5. I want to get some money back out of this one. Because you might remember during the hype of this train, we bought into it when it dumped pretty dramatically. It's probably one of the worst stocks I bought next to GEO Group. It's funny watching the lawsuits come around. I remember even Wells Fargo when they had that lawsuit. I'm sure do you guys get those? You guys see those come up anytime when you're just getting your mail and it's like, hey, this company that you used to own during this time period is getting sued, and you can recover some of your losses if it's over $10. It's kind of funny, really. But yeah, I mean, these are fun, man. I wouldn't, like I said, if you're losing a lot of money on these and you feel bad about it, you're probably putting too much money into it. I wouldn't make, like I said, I'm not here to talk about, best stocks. I put very incremental amounts of money into these kind of stocks. Like Aduro Clean Technologies is down 13% this year, but it's been like one of the best performing small caps I bought. I mean, it was up so much since we were buying it through like into 2023. And it just like it ran up a lot, and we did pretty well with it. Right now, I still think there's huge potential with these kind of companies. I like Aduro a lot. Plastic, turns plastic back into using hydrochemolytic upcycling. You can take dirty plastic out of the ocean and just turn it into oils and reusable, molds for plastics or whatever. You melt it back to that refined oil. It's interesting, man. This stuff's I love these kind of stories and companies. I just don't try and share them in my portfolio because I don't like megaphoning these that much in the perspective of like, I want you to get the whole message of investing. There's small cap investing, which is for a certain kind of investor. And, I don't recommend it for the vast majority of people. And if you're going to get into it, make sure you understand what you're doing and the risks you're taking. If you want to take the path of least resistance, which I try and beat over your head, which is index funds for the most part, and then, maybe dabble in some larger cap companies or even smaller cap if it interests you. But you just got to understand, like, there's nothing easy about this. And these YouTubers, including myself, to make it look easy, it's just not. But again, we get a few lucky, we get a lot of bad luck, a lot of good luck. Good thing the good luck makes up for the bad luck. And we're always mitigated. Always mitigate my losses. If I feel like it's changing, I'm out, baby. REITs law, interest too high. Will they high? They will recover. But I like RioCan. Yeah, we still own RioCan. The fiance still owns RioCan. I've looked at a few REITs, but I've been avoiding them pretty relentlessly. I feel like I'm going to regret it to some extent, but the fact is we don't know what's happening tomorrow. And I'm presuming that interest rates are going to eventually start to come down a little bit more dramatically in the next year, probably 1 to 2 years. And I'm really intrigued to see how that's going to bake into the part of the market no one cares about. And if it's worth getting in today, or if it's just worth waiting to watch the market start to recover, because you don't need to get the first, even if there's a 20% bump in some of these stocks, like you can start getting in then, because at least the earnings recovery is going to start to come into play. But I don't know. It's so interesting to me because the sad reality is if you're not in the few stocks that are making the wins and you're in the ones that are losing it, it can pull back so many gains that you need to catch up on now to even start matching the S&P. So I'm always like super careful and cognizant, but we have some of these. We have TELUS. TELUS has been destroying us. I've been debating on buying more. Been floating around with the idea of it. We don't mind holding the position for now. The VDY, I hold them. Yeah, VDY is great. It's a little concentrated. VDY, I hold EMB. Yeah, you sold all my EMB. Oh, you sold it all. What's EMB here? We'll take a real quick look. EMB stock. EMB. iShares, JP Morgan, USD emerging markets. And this one does not like it's done very well. You probably bought that out of the anticipation of some recovery of small caps, I would presume, or not small caps, but foreign stocks, maybe Chinese stocks. This one, if you bought the bottoms, you did see a 14% return, double digits. If you were lucky enough to catch that bottom, but man, it hasn't done a whole lot of shit for the last 2 years. I don't like emerging markets as much. The only reason I'd like emerging is probably European stocks, maybe like Hershey and its OG currency. I've been debating on it, but in the true form of passive income, I really have been kind of looking at what it would take to internationalize my income to the most extent possible. And even if I had to pay some form of withholding, I have been looking at opening up multiple currency accounts within my corporate account, because I figure what I'm going to end up doing right now is all my money is pretty much in US dollars in the S&P 500 sign, but I can't open up a European currency account. And I've been debating on buying some of the European stocks I like in its own currency, because I think the true form of diversification is trying to get as much multiple currencies. Because the euro has just crushed the Canadian dollar as well. I just want to pick like the two strongest currencies and just own the companies that are the most dominant, or even if it's an index within that country, and try and collect some cash flow from there at some point. Thoughts on HMAX? I do not like covered call ETFs. I always recommend that if you want to do covered calls, do them yourself. Don't pay a manager an absurd fee to basically underperform the market and pay you back your own money. The reason a lot of these companies have huge yields is because they're paying you back more than they're making for the most part, because they're pulling it right out of the stock. And it just, at the end of the day, they always underperform. I've only found one or two companies or one or two ETFs that trade options that actually outperform the broader market. I mean, you look at this thing, right? It's been around since 2023. You're a year and a half deep into this and you're down 17%. Does it even show you the total return in here? Yeah, because the yield's 15%. Like, you're definitely probably underperforming the market. I mean, yeah, year-to-date return is 2.5%. The one-year return is 6.44%. Since inception, the total return has been 1.84%. I have to presume that includes the dividends. Total returns including dividends. How do you? Oh, get the fuck out of here with this deep. I don't want to sign up to this shit. Get out of here. This thing right here. This should be an eye opener that you've been collecting dividends and your total return has been 1.84%, which means if you sold everything today and you owned it since inception, you've made 1.8% on your money. You have gladly paid somebody a huge fee to not beat inflation. Congratulations. Don't get caught up in these high yields. Be very careful with this shit. It's always very deceptive, which is why I love looking at the total returns of these funds, because they're collecting a 0.65% management fee, which honestly, does that include management fee? Because if it includes management fee, you're good. If it doesn't, then you're actually negative. Because when you sell the ETF, that's how it works. You're going to lose more than you actually made, which is bullshit. Any comments on VRT and NEE? I'll take a quick look just for one of them. Let's see what VRT is. Vertec Holdings. Why does that sound so familiar? Or Vertiv. Have I heard of this one before? It's 34 billion. It's up dramatically. Holy crap, 100% this year. I'll have to dig into this one, man. This is going to be one of these ones where I know I'm going to look at it and I'm probably not going to be as happy with the balance sheet, but there's probably something about it that is driving that kind of volume and gains, because it can't just be earnings, can it? Can it just be earnings? Yeah, let's toy around. Let's just take a look real quick. You got me curious now. I don't even know. Before we look at the margins on this thing, what do we got here? Yeah, 4.3 billion to 6.8. Gross profit has come back pretty nicely. What about free cash flow? Free cash flow has gone up a lot. It looks like they recovered a lot of free cash flow. So yeah, it looks like a bit of earnings are driving that. What do we got in the balance sheet here? We've got, not the best asset to liability, but probably the kind of business it is, it's probably acceptable. It's probably, I don't know what it is. I don't even know what this company is or what industry it's in. Return on equity is really good. Return on assets, not so bad. Hugely institutionally held company. What do we got here? Total debt to equity. Can I see the, where's profit margin? Why am I missing this here? Cash flow. Where the fuck's profit margin? I hate that they updated Yahoo. They moved everything around, so I don't see it as any profitability. Yeah, profitability is not great. 12% is not awesome, but hey, they're making it work. They're making a lot more. So whatever they're doing is working for them. Thoughts on CCO? Wow, definitely answered my question about Hamilton and covered calls. Yeah, covered call ETFs. I always recommend that just find something like the SBY, get enough shares so you can write calls against it. You can do put options on stocks that you like. I just can't imagine paying somebody, because they always underperform. It's just crazy to me. Crazy. All right, let's take a look at one more stock here and I'll get out of your hair here, guys. We've got Cameco. I know Cameco. Cameco is the largest uranium company. Oh, we got an uranium bug in here. Hey, it's the commodity players. I think uranium is one of the most fascinating plays right now. Personally, I haven't dabbled in it. I've worked with a lot of uranium companies that I've just been fascinated by. Some of them sponsored my channel. I love this shit right now. Look at the uranium price chart, man. Uranium, I don't know who's buying it. It's China or what's going on. People are stacking this shit like it's going out of style. And you just look at this nice all-time high. Like, we're pushing back to highs we haven't seen since the mid 2000s on the uranium price, because everyone thought uranium was too dangerous, and now everyone's like, it's safe. Let's go. I plan to buy BCT and TU for the dividends. Yeah, nothing wrong with that. I mean, you can put a little bit in there right now and you'll be printing, baby. CC yeah, sell some BCE. I don't know, debatable. It's always hard with those companies right now, man. We just need to get more interest rate cuts. If I was holding it and it wasn't like, too big of a position for me, I'd just hold it. I wouldn't even sell it. I would just wait and see what happens. Because they can't afford the dividend. A lot of people think they can't, but as far as I can tell, they can still afford it. They should be okay for a bit, but we'll see. They're doing everything they can to refine the business. So anyways, folks, I hope you enjoyed the ramblings of a madman. True honesty, complete bullshitter. come join my clown life and hopefully end up on a track to financial independence, because the more insane you are in this kind of market, the better off you seem to be doing. Seems to be the way it works, all us clowns. But unlike the other clowns, I will always show you my total returns and try and be as transparent as humanly possible, because I am not here to bullshit. I'm not here to rip you off. Yes, I will promote small cap companies. Some of them will sponsor this channel. Be 100% honest. Some of them I love. I try and pick ones that I like the most. Some of them I own. You take a look at my larger cap companies, but most of my money in ETFs. I play the field, baby. I play the field. We'll see where the field takes us. Stay cool, stay awesome. Peace, folks.